Comrades, hey, this is Carl from Yushenka with another precious metals video for you. This one will be a bit different than the previous videos. This video is about 72 months. It has been 72 months since April 2009. April 2009 is when Peter Schiff started his YouTube channel and when many precious metal enthusiasts took to YouTube and elsewhere to promote gold and silver investing. All called for buying gold during the lows and many called for buying gold at the highs. For this project, I wanted to know, how would I have done if I had followed their advice? My analysis here is to determine the return on investment of $1,000 a month for these 72 months in both silver and gold. I used the same monthly data for silver and gold as I have been using in my previous videos, the opening price on the first trading day of each month. My project has two parts. Part 1 is a comparison of lump sum investments in the precious metals and in the main stock market indexes. Part 2 uses my monthly data to determine the return on investment for monthly $1,000 investments in gold and silver. I also calculated the loss in purchasing power if one had put the $72,000 into a savings account. Before we get to the numbers, let's review the analysis we've received from the precious metal advocates. First, here are the assumptions the experts got wrong. They started with a very pessimistic view of our economic future. Again, I'm not judging. There is a market for this investment philosophy just as there is a market for investment advice based on optimistic expectations. I did not begin this analysis with a predetermined conclusion, and I was surprised at how poorly these investments actually performed. You'll see that my analysis suggests this view has been wrong, at least so far. We've seen record gains in the stock market. I know, not necessarily a reflection of economic recovery, but gains nonetheless. These guys are smart, but if they knew there had been an opportunity to double or triple one's money in the stock market, I have to ask, why didn't they mention that? They will no doubt play it off by saying, of course the stock market is inflated with artificial gains. Well, I was paying attention over the past 6 years, and I challenged them to show a 2009 video where they were warning investors to stay out of the stock market because their double or triple gains would be artificial. Another mistake, it has been suggested, the dollar will collapse. The dollar has only gotten stronger. I know it has every reason to be weaker, yet all the currencies have fallen too, and more. Our new motto for the US dollar should be, we suck less. Still, in hindsight, it is obvious that currency dilution is taking place elsewhere and that this is driving currency traders to the dollar. Why didn't these experts foresee this? I did not hear anyone suggest in 2009 that investors should avoid precious metals because the dollar would get stronger over time, thus putting a downward pressure on gold. Did you? Last, most of these gold bugs said buy at all levels of the market. We saw gold spike to the $1,900 levels, then fall flat to the $1,200 level where it has been for a while now. Some gold bugs have since disappeared, no doubt embarrassed at giving advice that in hindsight was plain wrong. I'll show you just what would have happened if you had followed their advice and had bought every month these past 6 years. But let me be clear, this is not a hit piece, just analysis of a couple commodities during a specific time period. The gold bugs or experts were right on many points I agree with, points I have used to justify my own purchases in silver and gold. First, a rule that we all should live by. If a Democrat gets elected president, buy gold. Gold was at $700 an ounce when Obama was elected, and even at today's low $1,175 an ounce, it was a good thing to buy. One point that Glenn Beck made back in 2010, this has stuck with me ever since, is the price of gold at the end of Jimmy Carter's term. It was roughly $800 or an inflation-adjusted $2,200. Glenn's question, who is worse for the American economy, Jimmy Carter or Barack Obama? I'd modify that by asking, what is worse for America, 4 years of Jimmy Carter or 8 years of Barack Obama? That argument alone was enough to motivate me to place my first precious metal order that same week. Another great quote is from my comrade Aaron Clary, whose blog is called Captain Capitalism. He said in a recent podcast, precious metals are insurance for stupid people in government. Amen, Comrade Clary. More reasons, the absolute irresponsible behavior in both monetary and fiscal policy. The experts got this right. Quantitative easing, or QE, created new money that went into all those stock market gains. We will pay dearly one day for this stupidity. No doubt Obama will someday blame the Fed for this, but I have yet to hear him badmouth their whorish money printing. Same with spending. Stimulus was $787 billion that we didn't have, but it pales in comparison to the annual $2 trillion we're paying in supposedly affordable health care. These policies have led to an unofficial inflation rate, or a hidden tax rate, of 6% so far. The goal of government-initiated inflation is to dilute our debt obligations. Last, these policies have spanked the private sector and have kept the United States in a perpetual recession. As far as data, for inflation, I ignore the government's data and just use a more realistic 6% annual rate. I think the only people who would argue this number are those who live in their mother's basements and who don't do their own grocery shopping. For part 1, I just used the two values, opening price for April 2009 and opening price for March 2015. And for part 2, I used the existing data set that I've used in my previous videos, my metals ROI analysis. So here's the results for part 1. This is what you would have if you had invested all $72,000 on the first trading day in April 2009 and cashed it out this past Monday, March 2nd, 2015. As you can see, you would have made money with any of these investments. Here are the numbers for part 2. This is what you would have if you had invested $1,000 a month starting in April 2009 with your last investment this past Monday, March 2nd, 2015. Of course, you'd have all $72,000 plus interest had you put the $1,000 a month into a savings account paying 1% interest. But today, that $72,000 would have the purchasing power of $61,050. As you can see, of all the calculations in this video, these investment choices all resulted in losses, big losses. The pessimistic view had merit in 2009. We had just come out of the subprime mess of 2007 and the banking crisis of 2008, and then Obama was elected, the most liberal member of the U.S. Senate. But for these past 6 years, the investments that were common sense in 2009 were the wrong choices to make. Of course, cash and precious metals are more insurance than investments, and tomorrow, next month, or next year, they could become the smartest choices. I've put some links below, in addition to my blog, Ushanka, my hat store, CommieObama.com, and links to my previous precious metal videos. I have added the following links below: Peter Schiff's YouTube channel and Comrade Clary's blog, Captain Capitalism. Of course, check out his YouTube videos, his podcasts, and his books too. I'll also post videos and future metal news and my trades. Until then, stay free, comrades, and have a good day.